everybody, Colter Brown here from the Northern Ag Network. Thanks for joining us for this month's update on our livestock markets. Well, much like the Montana State Bobcat football team, this cattle market has been on an impressive run this fall. Typically this time of year we see prices move lower both in the futures and in the cash trade just so we get a big run of calves hitting the market and seasonal pressure. But this year it's been nothing short of impressive as these feeder futures have taken off and this cash market not giving up any ground. It gives us a lot of excitement for what the next year may hold. Now, of course, at this point, we're nearly done with the fall calf run, so focus starts to turn to bull sales, what the bred cow market's going to do, and just forecasting for how 2025 may shape up. We're going to get into all of it today, but first, want to give a shout out to our sponsor, Red Summit Advisors. Depending on when you're watching this, there may still be time to enroll in the Pasture, Rangeland, and Forage Insurance Program with that December 2nd deadline. If you want insight into a PRF policy, whether for 2025 or into the future, Red Summit Advisors Ranch Pro Portal can show you all the details for what a policy would look like on your ranch and customize it to whatever your needs are. Learn more at redsummit.com. Well, cattle futures really had two very different Novembers. For the live cattle, they moved lower in the beginning of the month before rallying back a little bit in the second half of November. Really this fall, we've seen a pretty range-bound live cattle market, some pressure on the front months with larger harvest-ready fed cattle supplies and a somewhat stagnant cash market. However, deferred live cattle did put together some pretty good gains this past month. Feeders, though, nothing short of impressive. If you go all the way back to the beginning of September, January feeders have gained $34. That's more than $250 per head in just the last 2.5 weeks. We've seen $18 added. I think we're looking at very fundamental-based trade. Of course, a smaller calf crop and feed yards staying profitable, helping to drive this market higher, both in the futures and in the prices we're actually seeing paid for calves. With such a dramatic climb, I get a little nervous about this market feeling toppy, and it could pull back lower. We can't go higher forever, so a correction could be coming, but really, as we think of the future in this market, it's pretty positive, at least for the next year. Now, there was some market noise here in just the last few days after the announcement that Mexico confirmed a case of New World screwworm in cattle in the southern part of the country. In response to that, the USDA is restricting live cattle imports from Mexico. I don't think there's a lot of concern from an animal health perspective in the U.S., but did affect the market, especially just feeding into this idea of tightening cattle supplies. If we're not getting those imports from Mexico, there may be a hole showing up in some of the feed yards in the south, so we'll be watching that closely. The real determining factor in how high this market can move into the future is going to be beef demand. We did see a little bit of a rally in the box beef cutout. Seemed to take a little longer for the holiday beef buy-in to take hold, but what we've seen in the last 3 years seem to suggest that beef demand is pretty inelastic as consumers continue to buy beef despite inflationary pressure. Now, if we do get into a recession situation, that could change, but barring that, demand is a pretty bright spot. Now, in the cash-fed cattle trade, they followed the futures pretty closely, generally trending lower in November. Did see a little bit of a bounce back here towards the end of the month, but really that cash moving lower, $3 to $4 weaker in the live sales, dress trade down 7 to 8. Fed supplies will remain manageable, but likely to find a seasonal increase over the next few months. With those supplies below a 40-hour kill week, the feed yard will continue to hold the leverage, and longer term, beef demand should help to result in a higher trending market. Well, the monthly cattle on feed report came in pretty close to where it was predicted. A bit of a bearish surprise in the placements. They were expected to come in 4% above last year. Actual numbers 5% higher. In the marketings, we were also 5% higher thanks to an extra kill day in October. Inventory just slightly above year-ago levels. But really, after that report came out, the market went straight into trading higher on the screwworm news from Mexico and pretty well ignored that report. So that's kind of a look at the industry fundamentals. Now we're going to take a forecast of what could be coming for beef cow herd numbers. But first, a message from the Wyoming Beef Council. Of course, the big questions a lot of us are asking right now is when are we going to start to grow this cow herd and when are prices going to start to move lower? It doesn't look like we're going to see substantial increases in cow numbers going forward. To be fair, beef cow harvest is trending lower. We're probably going to finish the year somewhere around 18% below last year in terms of beef cow slaughter. Now, part of that is just fewer cows in the system overall after so many years of hard culling due to drought, but also we have reduced culling as an industry. From a cattle cycle perspective, the drop in cow harvest not enough to overcome the tight supply of bred heifers that we started the year with, and as a result, likely to start 2025 with a slightly smaller beef cow herd. I'm thinking that'll be the cycle low in terms of total numbers. Now, from a heifer perspective, we are seeing the percentage of heifers making up the feeder sales trending down. 42% of the feeders are heifers. That's below last year, but still above the long-term average. The percentage of heifers on feed consistently above 38%. Need to get that down below 34 to say that we're expanding, so that would suggest some mild level of heifer retention, but we'll need improvements in moisture and profitability to further drive retention. Lance Zimmerman, beef cow analyst from RoboAgri Finance, told me that he thinks 2025 is going to be another stabilization year for the beef cow industry. So you start adding all that together, and I think these calf prices have nowhere to go but up, at least for the next year. Could be even 2 years of strong prices, so ranchers got to be feeling pretty good. Now we're going to dig into our markets and what we saw trade here in November, but first a message from Nutrilix. Of course, winter is already settling in here, and the last thing a rancher wants to do is wrestle feed bags in the bitter cold and dark. Let your trusted local Nutrilix dealer provide your cow's whole herd health with a custom Nutrilix liquid ration. Nutrilix provides the necessary vitamins and chelated minerals along with added protein that fills those nutrient gaps. When feeding your herd this winter, choose the supplement proven to help maintain body condition scores and keep your cows working for you. Well, now let's take a look at some of the prices that we saw at local auction markets this fall. Of course, gotta start with the calves, where kind of like I've been saying this whole time, it's been an impressive market. I'm surprised that we're reporting calf prices this high, especially in November. If you look at some of the sales there from Miles City Livestock, we saw upper 4-weight steers averaging $359, 5 to 5.5 weights trading from $328 all the way up to $349. Now, typically the calf market does trend higher from a fall low to the spring high. Strong calf demand and tighter supplies have the potential to really elevate prices when green grass fever takes hold next year. The long-term average is for 5-weight steers to rally 24% from the fall low to the spring high. So with the average weekly low this fall for 5.5 weights coming in around 286, we could have the potential to top 350 in the spring. Moving into our weigh-up cow markets, that's been a pretty typical seasonal trend this year. Prices coming down just as we're marketing a large number of cull cows. Generally, a lot of those cows selling in the 110 to 125 money. We should find a bottom here over the next few weeks, and then we do typically see the market rally into the summer. So I'd say expect a strong cow market again in 2025. Of course, it's also production sales season, fall bull sales running, and prices are obviously higher. It's just a question of how much. You can see just a few of the recent sales there. At the Green Mountain Angus sale, we saw 200 bull calves average $82.95. At the Montana Ranch, 80 bulls there averaged $11,656, and Redland Angus 3% higher on the average with 170 bulls averaging $96.11. The bred cow market is heating up as well. We're really going to test that thing here over the next month. Of course, the Pays Blue Ribbon sale, one of the real market-setting sales that we see, but some good sales already. J&L Angus had the Montana Female Bonanza in Billings, and overall the bred heifers averaged 3,027, up 17% from last year. The bred cows averaging 32.36, up 16%. And in Torrington, some good sales already this fall with 3 to 4-year-old cows averaging 27.16. The cows over 8 years old coming in the range of 18.25 up to 2,200. Well, before we wrap things up looking at the sheep market, do want to have a quick message from Montana Fish, Wildlife and Parks. Here at the end of hunting season, they want to remind hunters that respecting private landowners and the access they provide is more important than ever. Positive relationships between hunters and landowners impact all recreationists. It's up to us to respect access, protect the hunt. And wrapping up with the sheep market, lamb prices have continued to grind their way higher. It was a tough start to the fall, especially in September, but really over the last month, I'd say the lamb selling at least $20 higher. Maybe those bigger lambs over 100 pounds, more like 5 to 15 better, but nonetheless strong prices. Slaughter ewes also marching upwards by $10 to $20, and even some strong numbers on those yearling replacement ewes at Newell from $210 to $280 per head. And last month, we did talk about the ballot measure in Denver that would have banned slaughterhouses in city limits, would have shut down Superior Farms, the nation's largest lamb processing plant. Good news, that ballot measure failed by a wide margin, so just a big sigh of relief for the entire U.S. sheep industry. Well, that's going to do it for this month's report. Thanks so much for joining us. From all of us here at Northern Ag Network, wishing a happy holidays to you and your family. We'll see you in a month here to wrap up how the year went in the livestock markets. But until then, I'm Colter Brown. Take care.